Good morning, everyone, and thank you very much for joining me. This is the morning market review, and it is Monday, the 25th of March. My name is Russell Shaw, I'm a senior market specialist at FXCM. And just before we get going with the live stream, I want to bring up our disclaimers. And the first one I'll bring up is the high risk investment warning. I'll keep this on screen for a few moments, and if you can have a read through that, it would be much appreciated. I'm just going to keep this on screen for another few seconds. Okay, I'm bringing up the market commentaries disclaimer, if you can have a read through this as well. And then we shall begin. Hey Raj, good morning to you. Hope you had a terrific weekend. Hey Brashadrak, good morning to you and hope you had a good weekend, sir. Okay, good. Let's go ahead and start off with the real rate as we usually do. Okay, here is the tab. All right, this is the weekly chart. I'm just trying to get this. Yeah, that's about right. Okay, what it looks like. Good morning, Alam. Good morning and welcome. What it looks like here. Okay, let's just go ahead, bring in our arrows. All right, here we go. Last week we had a big push down in the real yield. This looks as if it is potentially a condition 1 in a reference candle reversal. And what we're looking for this week is simply to see if we can close below it. So we've got here, let me make this just into a solid line. I prefer that. What we have here is a condition 1, and we actually got a condition 2. So condition 1 is, hey KD, good morning to you. What we have here is the highest high in at least 3 candles. What we do have the price, this candle's low has taken out the reference candle's low. But what we need, no negotiation here, is we would need this week's candle to close below last week's candle. That's what we call a reference candle reversal. It's effectively one way of measuring swing highs. Is one way of measuring swing highs. So we want to see if we're getting a reversal here. Now, what's interesting, just taking a look at the real rate in terms of classical technical analysis, potentially we've got a 1-2, potentially 1-2, and then here's a 2-3. And if it is a true 2-3 in technical analysis, then we would be looking for the next 1-2 down. What's the fundamental reasoning behind that? Lower rates ahead. So we are likely going to get a rate cut in June. I would expect 3 rate cuts this year. So we want to see if the real rate reacts to that. Now, if it's a 2-3, hey Kim, good morning to you. Hope you had a good weekend. If it's a 2-3, usually 2-3s are one of three patterns. It's either going to be a flag, a wedge, or a pennant. Doesn't really matter which one, but I think we've got a flag here, potentially. Let's just bring this up. So something like that. So if it is a flag and the flag completes, we would expect it to move to the downside, wouldn't we? Now, what's the big deal? We're spending a lot of time with the real rate. What's the big deal here? And the big deal is that the real rate's a key driver of financial markets. So let's just bring up the US dollar. US dollar, not behaving quite as expected, but let's just keep an eye on it for this week. So I'm going to bring the US dollar underneath that. So just pressing plus here. Going ahead, let's bring up US dollar underneath. Okay, and what I want to show you guys, just take a look at this. Okay, there's a correlation here. As the real rate moves up, we've got the dollar moving up. Okay, as the real rate moves down, we've got the dollar moving down. And then as the real rate moves up, we've got the dollar moving up. So you can see there's a very strong correlation, isn't there? Let's just make this into some sort of pattern. Now, I don't know if the dollar is a flag. What I've drawn here, I don't think is quite accurate, but just for the sake of the correlation, I've put it in. And then what we can do just to double check this is add in the correlation coefficient. We've done this many times, but let's just do it again. So just go to your indicators, type in correlation coefficient, right? Okay, and just make sure that we're looking at the US dollar. We don't want to look at copper here. Just bring up US dollar. Okay, so we're looking at the FXCM US dollar basket. And we've got a correlation here. It's quite strong. You can see that there are ebbs and flows, but by and large, it does get quite close to 100%. We're sitting on 60% at the moment. The reason we're sitting on 60% at the moment is because while it looks like we've got the reversal, or it looks like we're tending towards a reference candle reversal on the real rate, we haven't quite got that on the US dollar. But given that we've got such strong correlations, and given the fact that really the real rate is a key driver of whether you want to get, whether you want to invest in some US dollar denominated yielding fixed income assets, you can see that the correlations there is something that I think is I think there is causation there. So let's just keep an eye on US dollar. Now, I am going to say it's not behaving quite as expected. I think that if the real rate does show some sort of moderation, there should be some pressure on the US dollar. It doesn't quite look like we're getting that just yet. Let's just analyze the US dollar. Now, the reason we want to analyze the US dollar is because it's a key part of the major currencies, right? Euro, US dollar, pound, US dollar, Aussie, US dollar, Kiwi, US dollar, loonie, right? So if we're taking a look at the strength or the weakness of the US dollar, we are actually doing an analysis by definition of the majors. Now, let's just take a look at US dollar. We'll do a top-down analysis here. Bear with me while I bring up the US dollar weekly chart. Okay, let's just make sure everyone can see it. Now, remember, it seems, so we're in a tricky situation. How it resolves itself, I don't know. We're going to have to monitor this day by day by day by day. But real rate does show signs of coming down. It hasn't come down yet. Last week, there was a strong candle. We want to see if the reference candle completes. Now, if it does, we want to see if the US dollar follows. If it follows, it should be pushing towards its 30-week exponential moving average. As traders, that's not what's happening today. What's happening is we're actually above that 30-week exponential moving average. We can change this HT question mark to an HT. So we have got the higher trough locked in. The next point that we need to look for is this going to be a higher peak or is it going to be a lower peak? Question mark. Okay, that's kind of the next exercise we're doing. Where is the US dollar relative to the 30-week exponential moving average? It's above it. Okay. What direction is the 30-week exponential moving average? That's this black moving average here. It's pushing upwards. Where is the RSI relative to 50? It's above 50. So by and large, US dollar does seem to have a positive momentum behind it. I'm having a tough time reconciling that with the fundamentals, but be that as it may, technically it's showing support. Okay, so if the US dollar is technically showing support, I would expect the other majors to technically be showing some sort of weakness, right? Now, where it gets interesting for the US dollar is actually on the daily chart. Let me show you the daily chart here for the US dollar, and I'll show you why why it looks interesting. I'm just trying to zoom in here. Just bear with me, guys. All right. Where are we positioned in terms of our zones? Okay. We're in zone 1. We're in the bullish area between the upper blue and the upper red. Take a look at the Bollinger. The red Bollinger starting to show signs of expansion. So the volatility in the dollar does seem to be suggesting dollar strength. Again, where is the RSR? Where is the daily RSR relative to its 50? And it's showing strength. It's above 50. So there's an underlying momentum that seems to be supporting US dollar. Isn't that strange? I find that strange given that the real rate was coming down. So we just want to keep an eye on that. There seems to be some sort of mispricing in terms of the correlations, doesn't there? Now, where it gets to me very interesting, I said the daily chart is the chart that to me is the most interesting. It's the Bollinger. The Bollinger here is let me just change the Bollinger here. It's the upper band, we've got a 70. I want to change it to 80 and 20. Yeah. We're just getting the upper Bollinger starting to break 80. It's starting to move into the upper quintile. Now, why that is, you know what? I'm going to change it back to 70. I think it gives us just a little bit more to work with on this chart. Okay, so it's moving above 70. Now, take a look here, guys. When the stochastic moves above 70, when it, oh, one moment, there we go. When it moves above 70, so we go back to this movement here, it goes above 70. What happens to the US dollar? It's swinging. There's actually strength in the US dollar. So the fact there's no overbought, oversold condition in the stochastic. I have seen it in textbooks. Mathematically, that makes no sense. Okay, what the stochastic actually does superbly is measure momentum. When it moves to the upper extremities, that's strong positive momentum. When it moves to the lower extremities, that's strong negative momentum. So here we're moving to a strong positive momentum. We're moving to strong positive momentum on the US dollar. Now, if we use it, moving to strong positive momentum on the US dollar, let's take a look at the hourly and see if there are some signals that are manifesting on the US dollar. Okay, so just going down to the hourly chart here. Bear with me while I bring that up, guys. Okay, this is the US dollar. Now, what would need to happen here if that daily momentum is going to have an influence on the hourly? We would watch our dual trigger system. We've already got one out of the two triggers being pulled. That's the stochastics being pulled here. Okay, so the stochastic has crossed positively. What we would do then is we would look at our moving averages and we would see if our moving averages cross positively as well. The green's a 5-hour exponential. The orange is a 10-hour exponential. If we get a positive cross there, that's the two triggers. If we get the two triggers pulling, does that mean a swing ensues? The answer to that is, of course, no. The next thing that would need to happen is that the stochastic would have to make it towards the upper quintile. So the fact of the matter is we just got to see if there is two triggers here. So the dollar is looking quite strong as we start the week. I want to just reiterate that. I find it puzzling because the real rate does show signs of moderation. I think there is some sort of mispricing there. I'm not sure which way the mispricing is going, so we're going to monitor that for the rest of the week. All right. If the dollar is showing some sort of strength, let's go down. Let's just take a look at the euro, see what the euro is telling us. I would expect that there would be some sort of pressure on the euro if the dollar is showing some sort of strength. Let's go ahead, take a look at the euro daily. Going ahead, bring up that chart. Okay, this is the euro. Where are we in terms of our zones here? We're in zone 3, right? We're between the lower blue and the lower red. Okay, that's our bearish area. There is signs of the Bollinger, at least the lower Bollinger, showing some sort of expansion. So we are in the area of weakness for the euro. Where is the RSI relative to 50? It's on the negative side of 50. So it does seem that there is an underlying bearish momentum. Importantly now, where is the stochastic? Stochastic is moving towards the 30 area. If it goes below 30 and holds, we're going to get a swing. Okay, we're going to get a swing. And that's swings are tradable, right? So it looks as if dollar is preempting something, and euro looks as if it's responding to that. The fact that dollar is showing some sort of strength, I think, is important. It leads us along all the majors. Let's just take a look. One we don't look at all that often is US dollar Japanese yen. And the reason that I think it's interesting to take a look at US dollar Japanese yen is that last week the Bank of Japan did make moves to move out of its negative rate regime. So let's just take a look at US dollar Japanese yen. Okay. Same questions here. When we do the analysis, let's just be consistent with our questions. Where is US dollar Japanese yen in terms of its zones? It's in zone 1. That's between the upper blue and the upper red. That's the bullish area. Where is the RSI relative to 50? It's on the bullish side of 50. Where is our stochastic? Well, the stochastic is above 70, and you can see that when we above 70 and maintain above 70, there's going to be some sort of swing, or there tends to be some sort of swing. All right, just going down to the hourly charts. Hello, George. Pleasure to have you on the live stream. Let's just go down to the hourly chart. We didn't take a look at the euro hourly, so let's take a look at euro hourly. Then we'll take a look at US dollar Japanese yen hourly. So bear with me while I bring up euro US dollar hourly. Okay, so if we want the hourly chart to synchronize with the daily chart, we would be looking at our dual trigger system. So we would need the EMAs to cross negatively. There's already a selling tail on the latest candle. We would need the stochastic to cross negatively. Now, if we get the two triggers, okay. Does that guarantee a swing? No, we would need to get the stochastic to move into that lower quintile. If it moves to the lower quintile, so here we are in the lower quintile, okay, that's where the magic happens. There's the swing. Okay, so we would need to just get the triggers. If we get the triggers, then we need to get the cooperation from the stochastic. Hey, George, welcome. I'm glad that you're here. Please join us daily, and we try to give a good rundown of the markets. Today, we basically looking at some Forex. I think what we'll do is we'll just change it around slightly. Let's just take a look at the DAX. DAX is open now. It's just opened. Let's just see how the DAX is looking this morning. So what I'll do is a top-down analysis of DAX. Let's go through to the weekly chart and bring up the FXCM instrument that measures the DAX index. All right. So I like the DAX chart. There's an uptrend here. How do I know there's an uptrend? Via peak and trough analysis. So we've got a higher trough followed by a higher peak. And that in of itself gives the definition of trend. What I'm worried about is, of course, we've mentioned before, is the fact that it's overbought. Now, at some stage, I think that overbought condition is going to clear. If it clears, we'll get a dip in the uptrend, and that would be potentially exploitable. Let's just take a look at this from a trader's lens. So let's go through to the daily chart. All right. We are in zone one. Okay, we are in zone one, but this is slightly different to the other charts that we've examined this morning. It's overbought, and that overbought condition to me makes me uncomfortable. The reason that we generally use RSI is specifically for the overbought, oversold signals that are generated. When we go overbought, you must understand that at some stage it's going to normalize. So there's a higher likelihood of an incident of a risk event, right? A pullback. Just be very, very careful there, guys. I think this overbought condition shouldn't be ignored. Okay. This is the most inexcusable asset mispricing. I have no idea what that means, Cajun. Why don't you explain yourself? Okay. So let's go ahead and just take a look at gold as the last one. All right. It's been in recession all of 2024, new highs. Stock markets have been in a bull market. Okay? Stock markets have been in a bull market. They're generally getting led by the US real rate. They're generally getting led by the US real rate. Okay? Let's end off with gold. Where is gold relative to the moving average? It's above the 30-week moving average. What direction is the 30-week moving average? Is pointing up. Where are we relative to 50? We're on the bullish side of 50. Let's go down to the daily chart. Okay. It slipped. So gold has slipped. Gold has slipped into zone 2. It's moved from zone 1 into zone 2. So the movement from zone 1 into zone 2, movement from zone 1 into zone 2, that's relative strength. I mean, that's relative weakness right there. If the dollar continues, Katie, you should be able to see the gold chart. Katie should be able to see the gold chart. Okay. The fact that we've got this movement down here, I think, is indicative that the US dollar is moving higher. US dollar is moving higher. Gold inversely related to the US dollar. So the fact of the matter that we are moving lower here, perhaps a suggestion that that the dollar is showing some relative strength there. Okay, that's where we'll end it this morning. If there's any questions or comments, go ahead, type those in. Any questions or comments, type those in. All right, let's wrap up here, guys. Thank you very much for joining me this morning. Wish you a good day, good evening ahead. Join me again tomorrow. Thanks very much, guys.